Hello. Today we're talking about tariffs, higher interest rates, and bank windfalls. What if a single government policy could raise the prices of everyday items and make your mortgage more expensive? Let's talk about tariffs. Tariffs can have a significant impact on the Federal Reserve's decision making, particularly when it comes to interest rates. If the US imposes tariffs of 60% on China and 20% on other countries, the average tariff rate would jump to 17.7%, according to the Tax Foundation. Now, given that imports account for 14% of GDP, this could cause inflation to rise by as much as half a percentage point. With core PCE inflation already at 2.8, well above the Fed's 2% target, additional inflationary pressure could leave the Fed little choice but to hike interest rates again to maintain price stability. This potential action could affect borrowing costs, consumer spending, and overall economic growth, underscoring how trade policy can ripple through the broader economy. Could concerns about government debt be driving up interest rates, as we see here? Rising interest rates might not just be about the market. There could be fears about how the government handles money. Long term interest rates, like those on 10-year bonds, are currently higher than what the Federal Reserve predicted. Specifically, they're about 40 basis points or 0.4% higher than expected. This is tied to something called the term premium, which is the extra reward investors want for taking on the risk of holding long term bonds. Both the New York and San Francisco Fed monitor this term premium closely. The worry in financial markets is this extra premium might be rising because people are nervous about the government's ability to maintain its finances in the future. These fears could make the outlook for interest rates more unpredictable. Banks are raking in record profits. Are we on the brink of an economic boom or the next bubble? Big banks in the US are making massive profits right now, thanks to more business activity and a growing sense of optimism in the economy. For example, JP Morgan Chase, the biggest bank in the US, reported a record profit of $58 billion for the year. Goldman Sachs also had a great year, doubling its quarterly profit to 4.1 billion, mostly due to its success in stock trading and helping companies with mergers. Other banks like Citigroup and Wells Fargo also beat expectations with strong results across their business. Bank leaders are feeling positive about the economy in 2025 as many businesses expect more growth and opportunity. However, they also warned about potential challenges such as inflation, global conflicts, and possible changes in government policies. Even with these concerns, the banks are doing well, which suggests that the economy is staying strong. With strong earnings and the potential for even bigger financial moves, it's clear the banking industry is thriving right now. Thank you.